Okay, so we are good to go. Everything is established and just double checking. Okay, I'll make sure we're all set here. Um, but let's go ahead and get started with our regularly scheduled program. As always, my name is Jared. This is Engineering the Markets, and it is April 11th, 2022. Happy Monday to everybody. Welcome back. And as always, we're going to start by looking at past week performance. We'll look at what the S&Ps did on Friday and kind of overall on the week last week. Bit of a relatively choppy week overall. We had some downside volatility starting Tuesday and leading into the next couple of days, but more of a balanced area on Wednesday through Friday session. But when we're looking at where did the market go, what did it actually do, we can obviously quantify some of that with what we often refer to in this show as the expected move. And amid some of last week's volatility, it's important to note that the expected move last week was about $75. The S&P did have that gap down on Tuesday to Wednesday's session. And while that gap down was tradable and had some sort of short-term volatility as we were waiting on the Fed minutes coming out the Wednesday afternoon, overall, the market parked itself on the expected move and really had very little rationale or reason to push much lower. We saw that again on Thursday as the market sort of hovered near that relative price, and we're looking here at about 44.71 as the expected move low. And then, of course, on Friday, we saw a retest of the 450 area, very important sort of value zone over the past couple weeks, and the S&P actually drew down once again to that expected move. Now, the reason I bring this up is because a lot of trade and a lot of risk in the market S&P focused has been centered around this price. We've seen sort of the market volatility spark up on reactions from the bottom of this range. We've also seen a lot of intraday trade just sort of centered around this price. So you can almost think of it as a little bit of a pivot area for the market. Going much lower on last week's session would have been indicative of some volatility expansion. But while the VIX did have sort of a little bounce and short-term volatility was bid up slightly, the market was able to hold within range. So last week could be sort of classified as a normal week when looking at the S&P expected move. This week, worth calling out that we do have a short week. It's a 4-day week that's closing out on Thursday. So the expected move is measured from, in this case, the April 14th series. So you'll see here in the SPX, there will be a 14 April AM settled series. We're not using that one for expected move, but you do have your sort of Thursday expiration. And that's coming in from last week at about 76.72. So short week, less trading sessions overall, about the same expected move as last week. What can that tell us? For one, it can tell us that if we get a breach this week, especially a very notable close outside of the expected move, that's something that was very important last week. We never really closed outside of those ranges. We just had sort of breaches and testing of the area. If we get a relevant close outside of that expected move, for one, same ideas apply. Dynamic hedging can take effect. The market can go into an upside or a downside sort of momentum style breakout. And usually this takes a couple of days to resolve, depending on how powerful and the rationale behind the expansion. Two, what we can be looking for this week is continuation in volatility. So if you're betting that the marketplace is going to move a little bit more than what the option market is pricing, you're basically looking for volatility to expand, then the VIX, or in this case, some volatility future expansion, would also be expected. Last week, we did see, some relative bottoming action in these products. You could almost argue that we're back at our trend line in, let's say, the VIX. And all I'm doing here is just applying very simple trend line logic that the volatility also tends to respect, even amidst, the fact that this really isn't built in the same way as other technical products. So, trend line bounce, volatility did rise off of that trend line. And what we're looking for now is there going to be continuation from this point? Are we going to start to change the volatility trend back to the upside? Or is this simply a technical area for volatility to respond? Obviously, if you're short vol, kind of thinking about profit taking in these regions. And then, of course, big picture, what is the market sort of pricing in for the next round of expansion? Are we looking at indecision back into relative lows, or big picture, are we going to see another vol spike, as we do tend to have wider expansions from this price level? So with the market in this position, and with the S&P, which I'll shift over to the SPY here, we can start to identify some key levels that may be of note this week. And with the main theme this week just being about kind of staying engaged with the perception of market participants. So what we have right now is a weekly top. The weekly has established its relative swing high. We know that that is set or in place simply because we did have a close below last week's candle, and this has established a lower high from last week's range. So when looking at weekly levels, the high from last week is a very important high simply because it's the top of the momentum move from the bottom, and essentially it has been set. So moving forward, weekly bulls are looking for the market to reestablish themselves bullish at one of the predetermined supports. And what I have here are some probable support areas for the market, of which we'll look at a little bit more closely on the daily. But when you mark these down, what you're looking at is optimistic support. And that's going to be some of the lows from last week. We obviously are trying to turn the tide and form essentially a weekly bull flag at one of these price levels. And that would be the most optimistic bull scenario for a technical trade. We've retraced about 38.2. That makes sense for a bull flag. And if the weekly bulls can kind of turn the chart around and especially start to expand above their retracement line, which we'll look at on the daily, then of course the weekly bull flag becomes more probable. If we go down lower, and basically at this point, I'll keep the fib here, we're looking at about a 50% retracement, somewhere between 440 and in this case 437. In that scenario, the more likely move or event moving forward is that the market remains in a state of balance. And what this means on the weekly is we do have the potential for a weekly range to be formed over time. Essentially, the market not necessarily giving us the same large expansion to the upside and even downside expansion, instead forming back and forth price activity, usually centered in the upper bounds of its range, but it can also sort of breach and retest lower prices. And then finally, if we are to move down to about 432, and the reason being 432 being important, it's weekly opens that are coinciding with this price level. You also have a weekly low that coincides. And then you even have a weekly close. So there's a lot of confluence around this level. Lots of relative risk has been sort of advertised at this particular price. You can also zoom this out and simply say that this is about where some of these lower bounds were in September, obviously with some bottoming tail breaching. But overall, this kind of brings us back to 432, very notable support zone for the market. And what this means is from the most recent expansion, we get another 61.8% move back to the downside. What it does is it starts to almost fractalize everything that we've been seeing in terms of movement. A lot of ranges have been pulling back to about 61.8 once they've either bottomed or topped. And depending on how you're measuring certain ranges, a lot of those retracements have been deep enough to get to those price levels. So it's not outstanding to think that the S&P could do it as well. And what this means is, as a bull, you might want to be prepared for that potential scenario, of which it's still a relatively healthy retracement, but it obviously sets the stage for a weekly lower high off of the bounce and more balancing or equilibrium style trade contained within this range. Obviously, with the understanding that a lot of time may pass throughout this period, and we may see some additional catalysts enter the market. So as we shift into the daily, all I'm doing here is marking relative prices that are important for the market. We have things like shelf highs with failed expansions leading to more volatile downside activity. We have that 432 area, more notable on the weekly, but if you pull back in time, you'll see that the first daily higher low is actually marked off by this particular price. So a lot of these price levels are somewhat established historically, and the market is responding to them amidst previous corrections. And then our highest print, last week's low, as we zoom in to probably our lowest time frame here, you'll notice that the range we've been trading in over the past couple of days was established on the move higher. This was the first sort of daily potential change in trend. We had an hourly trend change, if you recall. Market was sort of, lots of shorts were covering. People were kind of getting a bit more, pressed to the upside. And the first hourly change did occur in this range, forming this, established range for us to evaluate. Last week, the price action was almost perfectly captured by this range. And what's so great about this is we had these levels before and they responded quite well. So as a trader, noting this and understanding that markets tend to look like this more often than not, you could have had some really home run style trades based simply on the first pullback of the move to the upside. Basically the first red candle that we saw, which attempted to change the trend and obviously to start consolidation, but we saw a lack of follow through as we continued higher. Now, what you'll also notice is so far, because of the weekly pivot, the high that's been set on the weekly, the daily has a bit of a risk to the downside with the formation of a new head and shoulders. Now, this head and shoulders would essentially be the low breaking from last week, and hence why we've marked off some of these additional prices. There really isn't too much in the way of additional support below last week's low until we get to some of these lower prints. And as we start to develop our technical skills here on this session, we'll note that what we're facing right now is a pocket. It's essentially a low volume area of the S&P that not a lot of transactional history has been allocated. There's not a lot of price activity below last week's low and specifically below the swing low of our uptrend move from a couple of weeks prior. So if we lose this area, more specifically, if we actually start closing below these prints, understand that the downside does have potential to move quicker than most people probably anticipate. And as we shift through this pocket, we'll be looking for some defense at lower prices, basically some additional support to come in as we, give back some of the previous move. So S&P's posture technically, along with the performance from last week, you'll note that last week was very highly discussed in terms of sector performance. And just to reiterate where we closed last week, this is sort of the picture that we got from the previous week's performance. I believe this has shifted slightly because we're looking at this on a Monday, but overall the picture is about the same. What you saw last week with healthcare performance, we'll look at that in just a bit. Energy continues to be an outperformer, but a lot of the price activity in energy actually occurred on the Friday. If you looked at energy maybe every single session, you'll note that most of that performance was sort of a final rally on the Friday. So it actually caught up relative percentage. Staples, obviously in focus, a lot of the retail stocks. We've been trading those intraday to great success. Utility companies, more swing style trading, but definitely in a breakout, all-time high, a very strong sector of the market. And then real estate. Now, we talked a little bit about how real estate in this perspective is going to be more your commercial real estate. This, XLRE is going to be your ETF. That particular ETF holds a lot more commercially focused companies. They're going to be certain REITs and focus on infrastructure type plays. Less concerned about the residential real estate, which is in this case, postured much more weakly, and obviously seeing some pressure with the 10-year interest rate rising as quick as it is. Looking down, of course, we saw the weakness in our big name sectors, services, communication services, cyclicals or discretionaries, and tech, all taking very large downside moves last week and putting some pressure on the S&P as a whole. And what this is great at doing is it shows that if we do not have certain sectors as a bull on our side, it's very hard for other sectors to basically counter that type of play, especially when all three, some of our, largest and obviously most, I would say, advantageous sectors from last year are all down on the week. That puts a lot of pressure overall in the markets. As a trader, it's good to note this because depending on how you're allocating, depending on what stocks you're focused on, your strategy might be a little different. For one, you might look at tech, discretionary, communication, maybe some of the other sort of weaker downtrending areas of the market as simply bounce opportunities. If a long comes in, you're only playing the long for a period of time. You're giving it basically a very short-term or optimistic style target relative to the trend. And if it goes higher, you understand that the signal really wasn't there in the moment. You're playing it as is and understanding that the worst case scenario is that the trend continues against you. So while some of these sectors are not in pure full-fledged downtrends, the bounces right now are more on the technical side. And we'll be looking for longer term trend changes to actually signal higher performance or a more confident and established performance, of which a lot of the stronger sectors from last week do have. And they've already signaled their breakouts. They've given you plenty of sort of opportunity to get established in them. And now they're moving. They're basically expanding. So we'll be looking for pullback buys, basically trend thesis in a lot of these areas, and obviously looking to see if anything changes, becomes divergent, or just becomes sort of a top relative to the move. So S&P, some levels to look at. I won't necessarily say that these are the absolute prices that we should all be focused on, but they do mark risk levels in the market. They mark where we can expect a lot of volatility expansion to come in, especially if we lose or break these levels after a period of additional transaction. Usually, what this means is more bullish behavior, sort of anticipating a bounce. The lack of that participation can lead to more downside and higher volume on the downside, and of course, volatility expanding along the way. Now, it's worth mentioning this morning that we do have some fresh lows in the bond market. If you've been tracking something like TLT, last week was a pretty poor or weak relative performance in the bond market. We're seeing the downtrend continue in a lot of these products. And what this is doing is, of course, bolstering or accelerating, in this case, the TNX, which is the 10-year Treasury Index yield. Now, this picture or this overview of where the 10-year has gone can have a lot of different ways for context. One thing I like to do is to start high level and just review the fact that not only is the 10-year in a strong uptrend currently, we're obviously seeing a massive rally in interest rates, but more importantly, the perspective of where interest rates tend to reject or where they tend to top out. What we're seeing right now is a lack of that participation. We're not seeing any topping action yet. The channel at this point in time is broken. We do, especially if we close outside of the channel on the monthly, we basically have a channel breakout. Now, what does this mean for us moving forward? Well, for one, anticipating the expected move from this coming from essentially a head and shoulder. And I'm going to just do this kind of roughly. We did this early morning, so I'm not going to repeat too much of this analysis. But let's say this move is fueled somewhat by the posturing of the reversal. In this case, I'm just looking at a monthly head and shoulder, inverse head and shoulder. It's a slanted one. So the measurement can occur from the left shoulder or the right shoulder. I'm using the left shoulder for worst case scenario and the widest expansion. So if I measure from the neckline to the head, and I go from the left shoulder measurement, I can even go from the highest print as it formed. What that essentially means is the measured move from this area is about 3.5%. Now, as we all know, bond market yields, interest rates are putting some pressure on tech stocks. They're putting pressure in growth. They're obviously signaling a bit of a slowing in certain areas of expansion in the market. And while this is happening, we also have our yield curve inversion, which at this point has been discussed. We're still inverted short term, and we are looking at whether the market is going to remain flat or go into a more inverted state. Basically a postured state to where definitely signaling a bit more recessionary pressure moving forward. If all that happens, and looking at the posture of the market this morning, it puts a lot of sort of concern with what has been working in the past. And what I'll show are some examples. Semis are one that I'm keeping a close eye on. You'll note that AMD is opening below 100 this morning. This is going to be a stock in play, very likely today. But more importantly, the position of its trend line. Where have stronger buyers been in this market? Where has the weekly trend resumed to the upside? And what sort of catalyst can we expect for AMD to hold trend moving forward? Obviously, its earnings are coming up in a couple of weeks. That would be something to look forward to. But short-term trade and also risk understand that AMD is now broken its neckline. We're looking at the first day where we're starting to trade below an area of risk in the market where if you've been a bull, you're obviously under all of the trading activity for the past, we'll just call it 9 months, because we broke this area bullish about 9 months ago. So it's a very important inflection area for AMD. We'll be looking to see if this is a false break. Short term, however, respect the trend line break. AMD has come off its highs. We've had lower high prints and topping tail activity past couple weeks. Understand that today, and especially moving forward, AMD has to prove it to you as a bull. It has to recover. It has to posture itself bullish once again in order to have any confidence towards bounces or towards levels being respected in the future. Same idea with NVIDIA. And as a whole, NVIDIA coming off of its relative high, same thesis here. We're not at trend line yet, but if the semiconductors as a group are postured this weekly or poorly to the downside, the perception here is what's going to change this model, what's going to be the reason to think bull once again. And similar to other products, the trend line's a little different in the SMH, but overall we've been breaching and testing this area before. What we're looking for is signals like this. Short-term signals, maybe getting back into trend, along with the risk if we do lose these relative lows, if there really is no more buying support at these levels. So understand that this is a posture not necessarily for all tech, but it is an area of tech that paints a picture, gives us an idea of what could be to come in other areas of the market that are heavy in regards to interest rate sensitivity. Obviously, XLK is a great guide, gives you sort of an overview of different tech stocks. And as we look at XLK, for example, from a fundamental, you'll note that there's a lot of breakdown here, most of which focused on the software side of the market. Microsoft, Oracle, Adobe, Salesforce, for example. But as you go down, your Apples and Microsoft obviously stand out. Semiconductors represent about 20% of tech. And what they're showing right now is a lack of bullish participation. Can we see that change? Absolutely. That can change as soon as market sentiment changes. But in the short term, don't be too aggressive. Understand that these are breaches. Market is testing, and tests are meant to either succeed or fail back in the direction of the dominant thesis. So if you're trading short term, these risk levels are super important. They're going to offer opportunity for us on the intraday session. Big picture, however, market is postured for weakness. And this weakness not only can continue, but as long as we have pressure in the bond market and with rising yields, this can be a story that basically paints the rest of the quarter as we move into a new earnings season. So all that said, my name is Jared. This is Engineering the Market. A little bit of a sort of back and forth analysis this morning. We're going to try and define some of this a bit more as we move into the week. But overall, the idea is similar to last week. Sector performance is in focus, some strength, some weakness. Look for that to either continue or change with the right signals. And then, of course, what is it doing to the index products as a whole? And where can we focus as traders to get the best opportunity? So with all that said, my name is Jared. Stay tuned for pre-market prep, and we'll talk more tomorrow.
All right. Good morning, Bear Bull traders. How's everybody doing on this fantastic Monday morning?
Hey, good morning, buddy.
Hey, Norm, what's going on, brother?
Nothing. How are you? How was your weekend?
Good. Actually, a relatively uneventful weekend. Got some work done. Hung out with the kiddos. Just kind of
Nice.
a normal little thing.
Very nice.
Getting things ready here. We actually got some stuff on our list, especially the gap down one, and kind of seeing where the SPY and all of these tech stocks are at. That's not incredibly surprising. Let's see here. I noticed. Let's see here. Notice here we've got a little bit on the gap up here, not very much. This will be an interesting place to look because whenever everything's going one direction, I always like to look the other. So we'll certainly get in there to look at that as we can see here over on the Piton today. That's funny. On the SPY today, you can see we're kind of sitting right down at these lows again, and that's kind of an interesting spot for us to be. We're going to have a lot of testing going on this morning. It'll be interesting to see if we have a clean break this morning or if if we catch a lot of chop. We are opening, kind of in the underneath of the breakdown area. So we're certainly already in range for a breakdown. So that'll be really interesting to see. How about you, buddy? Anything interesting going on out there in the market?
Yeah, I mean we've got some definite undercurrents going on. So China, Hong Kong exchange was down quite a bit. Obviously, it's been Monday over there a lot longer than it's been Monday here, so things are down over there. That you see a lot of China on the down gappers. The exception to that is Billy is on the gap up 8.3%. We'll get into the individual catalyst on that in a minute, why it's divergent from the others. But it was an inflation concern. Their producer producer inflation was higher than expected, and that hit things there. Also, Neo has halted production on a temporary basis, citing supply chain issues, partially due to the lockdowns and such in China due to COVID, and cost of materials, specifically lithium. I know there was some chatter on Twitter about the crazy price increase in lithium over the last decade, and especially the last year or few. And obviously, that's essential in the production of the lithium batteries that
Mm-hmm.
EVs use. So, see a lot of EVs on the list as well. And then we can break down some other stuff too. So, it's what we got going on, man.
Man,
And we can't forget. I mean, it's an individual ticker, but can't the Twitter craziness is going on,
no, for
heating up.
sure. Well, that's really great information. I think one thing that we've talked about a lot over the, past, what, maybe couple years, Norm, is just kind of this thought process as we're moving into EVs, there are other, supply and demand issues that are going to arise, not the fossil fuel kind in this instance, but, now the material it takes to create these EV, these vehicles, so
Mm-hmm.
which is, created a really interesting thing. Like, for instance, I got a letter in the mail from my dealership asking to buy back both of my used vehicles, right? Because their used inventory now is
Yeah,
completely
there's no
going off the
inventory
lots,
out there.
so it's so
There's
interesting.
no inventory, and they're trying to get people to sell them cars. But I mean, the problem is, if you need a car, you can't find one. So
Yeah.
my wife and I have both gotten a ton of those in the last year or so too.
I mean,
It's nuts anyway.
it's incredible to see the shift there. All right, well, let's go ahead and hit our gap up because that seems a lot easier than the gap down. Gap down, we'll rock and roll through because I think a lot of these we'll kind of see what they're going. Let's see what we got here. First one, we're not linked naturally. Monday, hold on. Luckily, I've done this so many times now. There's only one thing I'm getting as fast at as Carlos, and that's linking my DOS to my TI. All right. All right. We got Sale here. Sale is gapping out. It is gone. Took off. Looks like the float's about 91 million.
That's a buyout.
Um, buyout. Hmm.
Yeah, we can just move on.
Yeah, I don't like those at all. Moving on. We got a lot to look at. VNet Group. Let's see.
This
Lower
is
price.
also this is also a proposed buyout, but since it's not a confirmed or anything of that nature, it actually might move a little bit.
Rumor of a
That said,
buyout.
it's a huge spread. I mean, 9-10 cents on a $6 spot stock is quite a large spread. It's got no order flow, very little volume. Chinese, I believe, cloud company that
Hmm.
just doesn't look great. But who knows?
So
Maybe it heats up.
we can maybe make it a. We'll put that down just on the lower price stock, just for anyone who likes those. You're talking Billy earlier. Here's Billy. Billy breaking against the market basically in a strong way. What was going on with Billy again?
Uh, Goldman put a $35 price target with a neutral rating on them.
Oh, okay. Which in this sector is like amazing. All right, let's see. NetEase Inc. Up above $100. That's good for them. Gapping up. It looks like
Same.
they're breaking above a little bit of a range here.
Goldman hit this one too. They put a buy rating with a $132 price target on it. So that's
Hmm.
their catalyst.
Needs a little more volume in the morning, but that's certainly interesting. I'm gonna be probably watching a lot. They're just so far out of range this one already, but maybe it'll come back to us. And DWAC Digital Word Acquisitions. This one is in the 28.8. Anything interesting with these guys?
On which
Let's
one?
see.
DWAC?
DWAC.
That's former President Trump's social
Oh,
media company, and with the Twitter stuff, this has been moving directly opposite the Twitter moves, and Elon Musk getting involved over there. So,
interesting. In that I don't even think it's up and running though. Still, so
it is. They've just had a lot of problems with it.
uh, I didn't know. I wasn't sure. That's cool though. I mean, I guess always something fun to look at. Maybe we'll put this one down on like the third dairy list. All right, let's go ahead and get into this gap down list here and see what we
Miss
can
shop,
find.
but it just popped on and off the thing. And somebody will probably bring it up, so I'll just mention it really tough stock to intraday trade. Maybe that'll
Mm-hmm.
change. They proposed a 10-for-1 stock split, which would bring the price down under $100.
Hmm.
Maybe it'll trade great after that. Who knows? But right now it doesn't. So
I would
I'm
love
not
to
worried.
have this stock like in a like I haven't looked at shop in like my lifetime because it's never been in a tradable range to me. So it'll be interesting to see how it performs once it gets there. But yeah, for now for me, this one's not most likely won't end up in my list. Um, let's see here. I'm gonna go ahead and roll through this gap down. Norm, let me know if you see anything fun. Bicycle Therapeutics. Really low volume in the pre-market. Crazy spread on this thing. So This would not be something I would be looking to play. Um, BWV, which is Blue Water Vaccines. That sounds familiar.
Yeah,
They had
we looked
something
at this.
coming out, and then it was
This was on our list the other day. This is the one that
yeah,
gapped down
yeah.
83, or didn't gap down, but lost 83% on Thursday, and then was gapping up, I think, 13% on Friday.
Yeah,
So just
which
bouncing
is
around.
crazy when 13%'s that small of a candle. I don't know, guys. This one's probably with. It looks like we got a lot of really like high quality tickers out here, so I'm probably
Yeah,
gonna just
I
stay away
agree.
from that one. Here we got Neo. Neo's got a real catalyst today. I mean, what Norman was talking about, easier, production slowdowns, any of that kind of stuff. That's immediately going to garner some attention. So I'll probably keep an eye on Neo today. Price action could clean up a little bit, but right now, and because of that kind of stuff, with the battery stuff, you're going to see just EV sector stuff all over the place. So I'm probably not going to throw every EV stock on the list just because they're going to all be here. But if there's a specific one or two by the time we're done with this that you guys really want to take a look at, We'll do that. Let's see here. SBFM, that's Sunshine Biopharma. They're a low one. I don't like them. LI always lacks volume in the pre-market. This stock can trade well at times, but looks like lately, and I haven't traded it for a while, it's been very choppy, but also gapping down kind of with the rest, kind of getting into this void here, below 25. So it'll be interesting to see what it does today. But right now we need some more volume before it's list worthy. BCRX is another pharmaceutical. This one's BioCryst. Big, geez, gap down yesterday and I just ran with it, huh? My goodness. All the way down to 1050. Float on this one's about 180 million. Short float's humongous on this one. I mean, considering the drop, 16.28%. We had a lot in this one. If you're looking to play one of these kind of stocks, this one might actually be just fun because with that huge short float, it might squeeze if some heavy profit taking starts today. But not my style of stock to play, so I'll leave it off. Tesla on the list. It decided too good for $1,000. Just they're not into it, so they're coming back down. We kind of had this gap range before on Tesla. Now we find ourselves under it, down kind of near what would be like a support area. So it'll be interesting to see what happens with Tesla today. Anything notable on Tesla, or is it just kind of following this EV news?
Well, the lithium cost problem that Neo
Right.
pointed out is part of it, but also, of course, it's got Elon, its CEO, tied up with Twitter and doing that. So I know some people are concerned that might take if he gets really involved at Twitter, that might take his eye off the ball at Tesla. I don't personally think that's the case. The guy has the brain power of like 20 people, so.
Right, yeah, exactly. I was just going to say he'll just pick
and
a
the
new
passion
quadrant of his brain to assign that task to.
Yeah, exactly.
Dude's crazy, man. Becky, Beke, one of Carlos's personal favorites. Price action, not great. Moving on. Nvidia. So tech breaking down Nvidia into a breakdown range for sure on the daily. I mean, this thing has just been straight selling for quite a contrast to the end of the month, the beginning of this month. Especially on stocks like Nvidia and I guess tech in general. Just last month closed out on this kind of rally. This week or this month, just selling nonstop. Nvidia can trade, so I'll throw it on there to look at it a little closer to open to see if it wakes up. RIVN, similar catalyst here probably as Tesla and the rest, I'd imagine.
Yep.
RIVN's an electric, they make electrics, right? So
Yep.
I haven't had a lot of success trading RAVN. Has this traded well for you at all? Have you gotten this one?
I've taken very few trades on it. But when it's in play, it can move. But it's, usually it's running like today when all the EVs are running at the same time. One way or the other, it can move. But a lot of times you'll find something else that's better. So.
All right, we got that. Plug Power.
Excuse me.
Let's see here. We got Plug Power here. Volume very weak, not unusual for Plug. It's kind of a similar thing here. Here's our first Bitcoin. I noticed Bitcoin was dropping a little bit. Let's flip.
Bitcoin's down 2.3% and under some pretty significant levels in the mid 40s now that it's traded around. So,
if you want to look at Bitcoin and DOS, you can use the hashtag and then BTC. And that'll let you get in there and you can take a look at it. And so this is what this is what Norm's saying. We've been kind of selling on Bitcoin a little bit over the past, really the past week has been pretty much just straight sell other than one consolidation day. So you're going to start seeing, of course, we've got our, Mara and our other miners are going to feel the pressure once that starts to happen a little bit. Well, we'll throw Mara on there for maybe as a secondary for maybe bit play. We'll look at it. NLSN choppy. I don't know.
Trades pretty terribly.
Yeah, Sophie or Sophie. I just got a letter in the mail from them the other day offering me some consolidation action. So they're still active, but down to $7, and almost under $8 now. Pre-market does not look great on this thing, so it looks like it's just gapping down. Anything individual with this one, or just kind of
I
getting
mean,
in?
it's the same thing with the government continuing to push back student
Oh,
loan debt
that's
and
right.
everything else. It's just an ongoing issue, and so they have the same issue as some of the financials as well with inverting yields and such. So
I keep forgetting about the student loan debt thing. I'll be honest, I paid my student loan debt off, so I can't stand watching it because I'm just like, man, I could have waited. No, I'm kidding. But yeah, that makes sense. Let's hit Carlos's other favorite stock. So far, not great. So I'll skip that one for now. Meme stocks abound. AMC catching a little bit of a gap down today. This is another stock. This is the power of the meme here. Closed out the end of the year with just this beautiful rip, and now it's just basically just been coming back to reality. Went off of this $20 area, popped out, and came right back. That's funny. I don't know what this thing's gonna do, if any. But we can take a deeper look at that one if we'd like. Here's good old Twitter, and this is kind of what we're talking about. Twitter now, kind of back into the original breakout area from before when it gapped and then kind of ran a little bit. So now with all of this stuff, what happened, Norm? Didn't they say like not on the board or something like
well,
that now?
yeah. So they announced this morning. Elon over the weekend said that he's declined taking a seat on the
Hmm.
board. So some people mentioned that earlier when I talked about Tesla and people being concerned about Elon's involvement with Twitter. I don't think this means at all that he's not going to be involved with Twitter. I think it means he's going to be more involved with Twitter.
Mm.
Part of the agreement that he had with Twitter and taking that board seat was that he could only acquire 50. He couldn't acquire more than like 14.9% of the company. You got to remember, Elon Musk does nothing weak. He does
Mm-hmm.
nothing half-heartedly.
Yeah.
He thinks 10 moves ahead of whoever else is in the room with him. I don't know if he ever intended to take the board seat, but my guess is if he legitimately did so, especially the ridiculous, he plays like 8D chess, Jonathan. If he intended to take the seat and turned it down, my guess is he spoke with other board members over the last week or over the weekend. They got on him for, suggesting taking the T out of Twitter or the W out of Twitter and making it
Yeah.
titter,
Yeah.
and other ridiculous, silly stuff and posts. Some of them silly, some of them not. But I mean, he's the ultimate troll. So is he going to be trolling the company that he's on the board on their own platform, and the other people on the board are going to put up with it? I think he wants to buy more than 15%.
That's
I
what
think
I'm
he's going to
saying.
be aggressive, and I think that
We gotta get that stock price
I
back
think
down a little bit.
I think there's a lot more to come on it. Yeah, so we'll see. We'll see how it goes. I am not a president of the Elon fan club, by the way.
You heard it here, folks.
I am not an Elon
Norm said he is
fanboy.
absolutely the president of. Oh wait, not the.
Not the president.
That's. It's really interesting to watch because Norm just. I think it's really interesting because you and I as like students of the market, right? And we just love to see how the market unfolds, how the players interact with it, how supply and demand, the emotions of the market get affected. I think for me, I just really enjoy this whole thing because it's study wise. It's just insanely fascinating to watch this guy bag on Twitter for months while he's accumulating a position in it just to
Yeah.
come out and let it pop, and once it pops he starts bagging on it again, and now the price is going back down. It's just interesting stuff.
Yeah. So we'll see. I mean, he could buy the whole company. It wouldn't even like.
Yeah, I think what do
Make
you
a
have to get rid
dent.
of, like a 0.5% of his wealth or
Yeah,
something in order to
something like
get what he's
that.
got so far?
No, yeah, I mean it was ridiculous. So
So let's hit a couple more of these here, and then we'll talk about some community events, and then we'll dip into these for some levels, get our mod lists, all that good stuff. So we got TLRY in the house. Tilray has been off and on. This thing's just kind of like chopping around forever, just waiting on some news that's better than the news that's come out before. But I don't really see any with so many stocks on the gap up and gap down. I don't see this one being a good player. Um, let's see. We got APA, which is APA Corp. This one actually traded pretty okay yesterday or last session. It had a really big breakout that a few people caught,
yeah,
which was really nice. But I've never actually traded this one.
it's an oil ticker. It's oil's down 5% this morning roughly, so that's trading in line with that.
Okay. And I see Oxy on there, so
Yep.
that'll help us out with that. Let's take a look at Oxy since we're following suit there. I actually like where Oxy's at right now. Look at how beautifully this rejected at R3 after the run yesterday.
Twitter just dropped like almost $1 in a split second. My guess is Elon just tweeted something.
Thunk.
I hope he doesn't turn it into something untradeable by doing this kind of stuff.
Well, that's true because we've been having some really nice days on this thing. It would stink if it got too spready. All right, it's gonna be fun, folks. Today's gonna be interesting. LCID Group. This stock actually tends to trade fairly well for me from time to time. One thing I really notice is the extreme downward extension we are on LCID. We're right near S4 here and S4 on the one intraday, S4 on the daily. If by some means the market just decides to do a straight bounce today, just because why not? Gotta be ready for it. I'm gonna look to see this one maybe if it holds up around here and does something.
I don't see anything on Elon's account, so apparently that wasn't it. But who knows? I'm sure we'll hear about it in just a second.
Yeah, some just selling some shares then maybe. He probably just sold like, 1 million shares just to kind of balance a little bit. We got Baba on the list. I like Baba from time to time. Baba can have its good days or its bad ones. Baba's kind of in a middle value area, but it is in kind of a breakdown range. So if we go weak, I could definitely handle Baba. And let's see, NKLA to wrap it up. Just the EV lithium craze. NKLA used to be a really fun stock to trade back in its meme days. Lately, I don't think it really does as well, but it has its moments where it'll wake up and, like, yesterday it had an okay sell on it. So not too bad. Let's go ahead and call it there. We'll pop over to Norm here and let him kind of run through the weekly schedule, and then we will flip back over. We'll find some levels, mods, lists.
Yeah, since we've got the lag, I can't read off the slides. So let's just why don't you go to the webinars list and I'll read what's on the slides primarily. Don't forget, every Monday night we've got our onboarding at 7 p.m. Eastern. Carlos runs that. Somebody was asking about do we teach intro to trading? We do. That's part of it. So you can take the intro membership, get the intro membership, and check that out there. Also, technology webinars immediately following that at 8 p.m. this week. Tonight is Mike talking about complete guide to understanding commissions, and then next week will be DAS Trader Q&A with Kyle. Tomorrow night is strategy. That was with Peter, how to take smart trade entries, 8 p.m. tomorrow, and 5 p.m. next week because of his time zone. Eamon will be talking about his parabolic reversal strategy. Wednesday is psychology. This week we'll have Mike talking about why you should care about trading psychology. Very important topic. So he'll be tackling that on Wednesday. And then Thursday's mentorship. We've got an 11 a.m. session, a 4 p.m. session, and an 8 p.m. session. You can check those out. And then on Friday, crypto with Jared at 11 Eastern. That discussion, 11 Eastern on Fridays. Don't forget about stocktradingsimulator.com. That's our free web-based trading simulator that we've developed. It's at stocktradingsimulator.com. Go there, sign up. You'll get a couple of homework assignments a week. a couple of homework assignments a week from Eamon. And yeah, check it out. Hope you enjoy it. And that's all I got. If you're watching on YouTube and you haven't been in the chat, you'd like to try it out along with that do the intro membership and those introductory classes and all that, you can use the promo. Go to the homepage, scroll down about halfway down the page, and scroll down about halfway down the page. You'll see test drive now. That's 1 week. Sign up there. It's yeah. Look forward to seeing you. Use the discount code premarket24. It'll get you a discount off that intro membership as well.
Excellent. Awesome, Norm. Thank you. While you're reading, a couple people in the room were posting out that on Twitter there is a little bit of news apparently that Musk may engage in talks with Twitter, including strategy and governance or something like that. So we're just memeing out here, man. So I need you guys, like, I want to just throw this out there real quick. This gets really fun and it can be really enticing. This stock's starting to get dangerous. And I just want to kind of throw that out there for all of the newer traders or the novice traders. Stocks that are predictable and are easy to trend, easy to see good levels on, easy to see good volume on. These are the stocks that we tend to do the best with. Stocks that just basically stay in relative auction periods nonstop, just bouncing all over the place with like no value, or that can be established, which these meme stocks can often do, can get very, very dangerous because you're just long in a position, everything looks good, all of a sudden tweet comes out, now the stock drops $2, you haven't even had time to think about it, right? So just keep that in mind as you take these positions. Really play them with extreme care and attention.
Benzinga just mentioned that there's a amended filing for Musk on Twitter, and it kind of backs up what I think Sniper Focus said about the having some sort of a role there, advisory role or something. I'm telling you, he's not going away from this. I don't see a million years this guy walking away from this at this point. But
I agree. All right, let's go ahead and hit through our list here and see if we get anything interesting. We mentioned before we've got Billy here. Let's take a look at Billy. Billy's in this really high value area that it's been chopping around in for a very long time, but today it finds itself gapping against the market and opening above R4, which is a breakout range. So I find that very interesting. We do have a large bid camping 2732, which is back above R4. So I don't think we're ready to go away yet because we still have a lot of orders on the lower side of the ladder for this one. So at the open, if you're looking to play Billy, I'd look for it to come back to 2 days ago's, 2 days ago, low. Come back to 2 days ago low here and bounce around 2650 and VWAP, reclaim R4, maybe play it for a breakout at that point. But as of right now, yeah, we've got too much balance on the L2 to really make a real decision on which way we want it to go. NTES, I'm not a fan here. This won't be a stock I'll be playing. If you guys, at the end of this, if anyone wants that one broken down, we will do that. Same here with Shop. Unfortunately, until Shop comes into a more reasonable price range for me, I'm not going to be able to play it. However, if it is in a reasonable price range and this is kind of your style, what I would look for, because we're opening under R3, is I would actually look for this. The stock will either need to rally above 630 or sell down to around 586 to 690 or 590 before I think this would be a viable buy. If you are looking to short it for a continuation of the daily trend that's going on right now to the downside, which since we're sitting on top of S3, I don't know if I'd recommend that. I would actually want it to rally all the way out to around 630 and then fail from there before I would be willing to short. Tesla. So Tesla's in the EV thing. Twitter also getting a lot of attention from Elon. Might make investors in Tesla a little anxious. So maybe with these new lows, we losing this gap from before, we're certainly invalidating as Jared would say. And if you guys haven't, for anyone that's in YouTube right now, if you're unaware, Jared does an Engineering the Markets every single morning from 8 till 8:30, and he covers a lot of stuff, like this. And it's on stocks like Tesla. We talk about there's a lot of bulls who bought the breakout on Tesla for the gap, that their thesis, if you will, or their play is going to be invalidated, if not already, very, very soon. So you got to start looking to stocks like Tesla like this, as if it starts to make a new low and it gets low enough. Well, yes, the bears are going to come in, but also the bulls are going to get scared out and take profit, or just stop out because they're wrong. And if that happens, we can get some very aggressive unidirectional price movement as the market responds to that catalyst, right? So keep an eye on some of these stocks, like like even a Tesla today might provide some very good opportunities as it makes a run, maybe even for VWAP at this point. It was only at VWAP a month ago. No reason it can't go right back. We've rejected out of this upper range, right? So maybe we're trying to return back to mid-range or the top of this lower range here so we can reconsolidate and try again. Could be interesting.
I just want to clarify that Engineering the Markets is every morning, Monday to Thursday,
Oh, thank you. Right, minus Fridays.
or Saturday or Sunday.
True. I mean, yeah, you can show up for that. He definitely won't be there for those days. So tech, I'm gonna pop up to Qs real quick for tech. Notice on Qs that we've kind of come back to VWAP, come back to value, and now we're rejecting down. So we're kind of similar posture to what Nvidia would look like, right? As we're now rejecting into these lower ranges on tech. Very, very interesting. Where did AMD go? AMD was supposed to be on here. See, AMD near this critically low level here. I already marked this level from this morning, and AMD's chopping right around 99.35, finally under $100 again. Rejected VWAP quite a few times. So if we're going to move lower, we might be in that time, but we're at a very serious line in the sand moment here for AMD. So it'll be very interesting to see if we can get a kind of like almost like a dead cat out of AMD. Just have this thing just ripping down for days, just have it support and run out the other way. If the market goes long, AMD's my spot that I'm going to be looking for. Let's see. LCID still extended down. Not looking as pretty, but in a buyable range for me. If you wanted to short LCID, you'd actually need to break down further. Since we're in this mid range, I'd actually be looking to buy off of here, which does not look like a great idea right now. Let's see. Ladder is really strong at $21. Pre-market low has a very large set of bids sitting there, so I'd kind of pay attention to that level at the open. All right, not doing too bad. Let's see. NKLA also on the decline. Pre-market volume not great. APA needs volume. And then Oxy. So Oxy was really fun. Oxy, we actually closed really high on R3, but rejected R3 precisely. Now we're kind of coming back here. It'll be interesting to see what oil does. I know it's off the pump a little bit. I know gas here was under $4 a gallon over the weekend, so something with oil is going the other direction. So maybe with the strong kind of the strong buy yesterday, today on this may sell a little bit to give a little breath for the if we end up doing another leg up, if this is viewed as the top for now on this oil, then maybe we rotate sectors and start pulling money out of this into something else, which could actually cause a pretty interesting sell. So we'll have to watch that. So I'm going to hit one or two more, and then I'll go out and check out what the moderators are going to be looking at today. And then we'll take a couple of things and close this out. A couple tickers. Twitter's got volume in the morning. What else has volume? Let's find out. I'm going to run my high volume scanner real quick. All right. We got a lot of volume this morning. Apple, AMD, APA, Billy, NVIDIA, and Twitter seem to be the standouts. volume wise. So I like that. That's probably going to comprise the majority of my list. Will be those. Let's see. Neo's got some potential for a real good day today. It's certainly got the catalyst it needs. Neo will 100% be on my list today. The question will be how to play it. Right now we're right at kind of a support zone for Neo that it needs to lose. And we've already broken down on the intraday chart. So Neo actually might be a strong squeeze today. If it does manage to somehow make new lows and break down, do not underestimate the power of the breakdown. We kind of have this level right about here. Oops, that wasn't the right thing. We got this level like right about here. Notice how that cuts right through our current price action. So if we can manage to get back above to 1850 and move up, we could actually squeeze today back into S4 and then chop or sell. So we'll have to keep an eye on Neo. Could be fun though. And that's about that. What do we got here? I'm not seeing too much on the mods side, I don't think. Mods are out. We're not trading today. We're done. So let's see. What about Cody? What are you saying? T? Grab a couple tickers. How about you guys over in the over in YouTube land? You guys have any tickers that y'all want to look good at, or y'all want to look at that I haven't hit already? By the way, if you have a chance, toss me a thumbs up. I'd appreciate it. Like, subscribe. You know how it goes. KC, Kingsoft, Cloud just hit the gap down. Nah. This is AT&T? Dang. What happened to AT&T?
No, it's nothing. They spun off part of the company.
Oh, okay. All right, pass.
It looks like something.
It looks awesome.
But yeah.
Okay. I'm disappointed. All right. I thought AT&T was. I was like, are my cell phone prices going down? This would be great. WFC. You know, Javier, we got banks are coming up on earnings here. I think
Wednesday.
Pretty soon, right?
We got earnings season starting Wednesday. Can't wait. It's been rather dull the last couple of weeks, frankly.
Yeah, absolutely. So maybe just with a thought, a little buy the rumor idea here on this stuff. Maybe we can keep a secondary list, side eye, if you will, on some of the bank stocks. See if any of them start to make any movements leading into earnings. Could be interesting. So we'll have to keep an eye on that. Let's see. Let's grab. All right, what do we got here? We got some mod lists coming in, folks. All right. Jared here is going to be watching NVIDIA, AMD, Neo, Twitter, Oxy, and TCAT. That's basically my watch list. I mean, I'll probably sub out TCAT for like Apple or something like that, but I mean, that's basically my watch list. I actually might watch Tesla today, which I can't believe I'm going to watch Tesla on a day Jared's not going to watch Tesla, but whatever. He'll add it on. You'll see. Tiffany's watching Tesla, NVIDIA, Baba, Twitter. See, Tiffany's watching Tesla. Just saying, don't miss out. Dima's got Twitter, Baba, Apple, and Oxy. So yeah, my list is basically just everybody else's list. So this is going to be an easy day for me. One thing, we got MU just popped into the gap down list. MU's been trading horribly lately, though. All right, not great. All right, what do we got here? Let me pop back over to YouTube here. How about y'all? Indigenous Pathways. Love that name. KGR. You said KGR. That's not a real thing. Kroger, right? Give me the ticker on that one there if you get a chance. Indigenous. I think that's for SST.
Kroger's KR.
It's just KR, right? Okay, thanks Norm. Let's see, SST. SSTs, I would like to see a little more like volume and direction in the pre-market. This one makes me a little nervous, PG, to be honest, just because of this crazy inverted day it had then. And then the past couple of days, I mean, it's had movement. So if you can time it right, I mean, the stock moves. So I can't, it's not like it doesn't trade intraday, and it has been. I don't know if it does today, or if it does one of these little just indecision candles or something. But I mean, it might be worth a look. But right now, with not as much information, the standout area I'm probably paying attention to is right here, right at the previous day's low, and previous day's close, right? I'm probably going to look at to see if it supports in here to see if I can buy for a run back up. But this candle here is a huge sell candle. So if it makes a new low below this, then who knows? I don't know if I'd feel comfortable shorting into this thing, if it even has them, which it does not. So you couldn't even short this if you wanted to, or at least not on IB. So you're a long bias only on a stock that had a huge, gigantic sell candle. So I'd be careful on that one. And then let's hit Joe. Joe, you said HD, buddy. HD here. I see what you're saying. One thing, Joe, in YouTube, Lowe's, Walmart, a lot of these durables, they've been doing well. I mean, prices have been going up. Their prices have actually been doing okay. Home Depot a little low, comparatively now that I'm seeing it. So this might be something, to keep on a back burner. Home Depot for me tends to trade not as great, but we have two very strong days going up here. Now the thing is we're right into a sell range. There's a resistance area here at R3, so we need to actually it would be a hard long for the trend right now. Might actually try and come back to value, so keep an eye on that. But otherwise, might be doable. All right, we got the bosses list coming in. The Dr. Andrew Aziz in the house. He's got Nvidia, Baba, Twitter, and Neo. And of course the TQs. Looks like that's going to be we're going to have a good time in the room today if Andrew's loading up Nvidia and Baba. Brian Presum, the Prophet of Profit, is going to be watching Neo, Twitter, Billy, Sark, and GDXJ as a proxy for gold and silver. All right, everybody. Well, I'm going to go ahead and call the pre-market show for this morning. One more day tomorrow with me, and then our boy Carlos comes back, and I'm certainly looking forward to that. I know you guys will be, but I certainly appreciate everyone sticking through while I pilot the plane a little bit while we're doing that. I hope everyone has a great trading day. It should be an interesting one today. We've got lots of stuff out there for you to look at. Don't let that be an issue. Be picky. Whittle your stocks down to something that you can really, really manage. We've got a lot to look at, so analysis paralysis can be real. I hope everyone has a great trading day. As always, keep it green. My friend Norm, Thank you, brother. Have a good one, man.
You got it, man. Thanks. Take care. Trade safe, guys.